Hello everyone. Hope you all are good and hope that you have studied the previous lectures of chapter 5 from part 2 properly. In the very first lecture, we have understood about gross profit ratio and its related sums and illustrations. Second lecture, we have understood about operating ratio, again the related sums and illustrations along with the proper explanation of formulas. Then in the third lecture, we have understood about operating profit ratio. This is the fourth lecture for chapter 5. Let us quickly revise what we have done in last lecture, that is lecture 3. We have understood about operating profit ratio, which is given on page number 220. We have understood about its formulas. Then we have solved illustration 8 in two ways. As I said, sum number 6 is similar to this. Then we have solved illustration 9. And I asked you that you should read the formulas of net profit ratio for the next lecture. That is the lecture that we are having today. So net profit ratio is the last ratio from profitability ratios. Yes, there are 4 ratios of profitability ratios. The topic given on page number 215 in your textbook. The 4 profitability ratios: gross profit ratio, operating ratio, operating profit ratio, and lastly net profit ratio, the topic that we have taken today. Yes? So the formula and necessary explanation of net profit ratio is given on page number 222 as written and presented on your screen. Yes? So you should please pay attention to this. This is easy, but little bit, requires the basic knowledge, yes, of everything that you have understood in accounting. Yes? So let us begin understanding this. Yeah? So on page number 222, first of all, the topic net profit ratio. The meaning of this ratio is given. This ratio discloses the relationship between net profit and sales. You have obviously heard the word net profit. Of course, you have heard this word. So you have to apply your knowledge here. Yes, further it says this is an income-based ratio. Obviously, if the ratio is income-based, the increase in its percentage obviously shows increase in profit. This ratio shows the percentage of net profit to sales. Obviously, profit at the end is related to sales. What is net profit? The amount remaining after deducting all the expenses from the total income is said to be net profit. We can quickly recall the final accounts that we have learned in standard 11th as well as standard 12. From standard 12, I have not explained that chapter. But obviously, the formats are same. Net profit can be obtained from profit and loss account that you know very well. Yes? So there's nothing new. You just have to consider, you just have to recall profit and loss account that you have learned previously. Yes? The formula for net profit ratio is what? It is net profit after tax upon net sales into 100. This is the simple formula of net profit ratio, just the way you had about gross profit ratio. It was gross profit upon net sales into 100. Here it is net profit upon net sales into 100. Net profit after tax. What is net sales? Sales minus sales return. There's nothing new in that. The new thing is net profit after tax. So net profit after tax can be obtained with this formula. The table which is given here. Firstly, sales less sales return gives you the amount of net sales, which is to be written in the second column of amount. Here you are having two columns for amount. Yes? Then further add non-operating income. Yes? So this income will be given in the question, not to worry about that. You'll be easily able to find it out. What is non-operating income? The incomes that we write on credit side of profit and loss account. Which profit and loss account? The one that we have learned in final accounts. Yes? Alright. So total income is obtained. The net amount of total income to be written in the second column of amount. Let us revise. Sales minus sales return gives you net sales. In the amount of net sales, you will add non-operating incomes. That you will understand in sums. Non-operating income, which are the non-operating incomes. For now, if you want to understand, these are the incomes that we used to write on credit side of profit and loss account. Yes? Further, the amount obtained is total income. Net sales में अगर आप non-operating incomes add करेंगे, total income will be obtained and that is to be written in the second column of amount. Further, total income minus COGS. Now what is COGS? It is cost of goods sold. Again, how to find out COGS? The long formula for which is given on page number 215. Again, the same concept I am going to repeat. This we have understood while calculating gross profit ratio. Yes, so if you are having your textbook, please pay attention. COGS on page number 215. Yes? How do you determine COGS? By now you should be, 100% वो formula आपके mind में fix होना चाहिए. Yes. Which is opening stock plus purchase expense. Yes, I am reading on page number 215. I am reading the formula for COGS. Why? Because about net profit ratio, the topic that we are doing right now, we have reached after the step of total income. From total income, firstly, you are supposed to deduct cost of goods sold. Yes? So, I am explaining the formula for cost of goods sold, which is given on page number 215. Opening stock plus purchase expense minus closing stock, it gives you COGC, that is cost of goods consumed, plus wages plus factory expenses gives you cost of goods sold. If wages and factory expenses are not given, then cost of goods consumed itself is cost of goods sold. The amount remains same. Alright? Further, so COGS, the amount, if it is given in the sum readily, you will write it down that way. And if the amount of COGS is not given readily, you will have to find out with the help of this formula. And an optional and short formula to this is, you can also find out COGS if you are having the amount of sales and gross profit with you. If you remember the formula for obtaining gross profit, what it is gross profit equals to net sales minus COGS on page number 216, prior to the formula of gross profit ratio. I repeat, the formula for obtaining gross profit is what? It is sales minus COGS. Yes, and the formula for obtaining COGS, the long formula, we have understood right now. But there is also, there is also an option for finding COGS with the help of short formula, with the help of the formula of obtaining gross profit. If you will change this formula a bit, I'm reading on page number 216. It is gross profit equals to sales minus COGS. Now, if you want to obtain cost of goods sold with the help of this formula, what you are supposed to do? You can, you can change the formula. You can write it down as COGS equals to sales minus gross profit. This way also COGS can be obtained. But if the formula of sales and if the amount of sales and gross profit is given. Yes? Okay, so that's all. Further, coming back to the net profit ratio, after COGS, it is operating expenses. Again, we need to revise. What are operating expenses? Of course, the second ratio in profitability ratios, which is of operating ratio, on page number 218. See, you should compulsory have your textbook with you. Otherwise, it is difficult for you to understand. So, page number 218 in your textbook. Yes, I can wait till you find it out. Yes, so over there you can see the heading operating ratio after illustration 4. And in that, we have put a tick mark towards the point of operating expenses, if you remember, in second lecture. I'm reading the same. Operating expenses are those expenses which are incurred for operating activities of business, where office expenses, which is administrative expense also, sales distribution expense, also known as sales expense, employee benefit expenses, इसमें क्या include होता है? Salary. Then depreciation, amount written off, etc. are included. Yes? So, you know very well about operating expenses. So, coming back towards net profit ratio, we were talking about operating expenses. So, operating expenses are this, the one that we have revised. Fine then. The next thing that you are supposed to deduct from total income is financial expenses. On your screen, in the formula of net profit ratio, the table that we are understanding, we have understood about COGS, then about operating expenses, now about financial expenses. Financial expenses can be interest. Yes, these points are also given on page number 218 in the explanation of operating ratio itself. Yes, so financial expenses will be deducted from total income after deducting COGS and operating expenses. Then non-operating expenses. This is given on page number 219. If you will read, loss on sale of asset is other expense. Yes? In short, all the points are given there. Lastly, non-operating expenses. Yes? Non-operating expenses are not included while calculating operating expenses. This point we have understood while understanding the topic of operating ratio. So finally, which are the non-operating expenses that you will understand in the illustration that we are going to start? Yes? So in short, you are supposed to deduct COGS, operating expenses, financial expenses, and non-operating expenses. Once you deduct this from total income, the figure that you get is profit before tax. As written in the very first line, in the meaning of net profit ratio, it says this is an income-based ratio. And what is net profit? The amount remaining after deducting all the expenses from total income. So, total income that we have obtained after adding non-operating incomes to the net sales, then we have deducted all the expenses. So once we have deducted all the expenses from income, the figure obtained is profit. But which profit is this? This is profit before tax. So from this you will deduct income tax, the percentage for which will be given in the respective question and illustration. Finally, you will obtain profit after tax, the one which is required for calculating net profit ratio. You can see in the formula it is net profit after tax. The last word here, profit after tax. Which profit? Net profit. So for obtaining net profit after tax, you need to memorize this format, which is sales minus sales return. You'll get net sales, you will add non-operating incomes, you will get total income, you will deduct COGS, operating expenses, financial expenses, non-operating expenses. The figure obtained will be profit before tax. You will deduct income tax from this, and the amount obtained will be profit after tax, the one that you will substitute in this formula, and you can obtain net profit ratio. Objective and trend, of course, you will read, and obviously this is income-based ratio, so increasing trend indicates enhancement in total profitability. So we have an illustration, illustration 10, which says, from the given information in illustration 9, calculate net profit ratio. So let us check what is the question for illustration 9 first of all. That's the reason we have included illustration 9 again in this lecture. Though we have finished this in previous lecture, and we have included it here again. So this much information is given here. Now you are supposed to use your common sense, obtain all the necessary figures which are useful in obtaining net profit ratio. So first of all, the formula for obtaining net profit ratio. Illustration 10, and they say that you are supposed to obtain net profit ratio from the question given in illustration 9. So illustration 9 is here. Firstly, let us recall the formula for net profit ratio. It is net profit after tax upon sales into 100. Sales can be easily obtained. Sales and sales return is given 8 lakh and 30,000. So let us see the solution. Okay, we can see here. Sales 8 lakh. We are in the solution of illustration 10. Less sales return 30,000. So net sales is 7,70,000. So as per the formula of obtaining profit, what is the next step? It is you are supposed to add non-operating income. So first of all, let us find out non-operating income from illustration 9. Yes, dividend received. Yes, it is a non-operating income. So we are supposed to add non-operating income here in the amount of net sales to obtain total income. There is no other income in illustration 9. I mean in the question which is given in illustration 9. Yes, so we have followed a pattern. We have added non-operating income to net sales and total income obtained is 7,85,000 this way. Yes? Okay. So which is the next step as per the formula? Yes. We are supposed to deduct COGS, operating expense, financial expense, non-operating expenses. So first of all, we'll find out COGS. Yes. So there is no need of obtaining it again. You have solved it in illustration 9. So you can present the same figures, same data you can present, copy in illustration 10. Yes. Less COGS, you can see opening stock plus a purchase expense minus closing stock. And COGS 5,10,000. We have obtained this in illustration 9 even. Yes. Further, you are supposed to deduct operating expenses. So operating expenses given in the question, that is illustration 9, are office expenses and depreciation. Office expenses is nothing but administrative expenses. Yes? You might be confused, ma'am, why plus is written here? It is you will deduct the total expenses. You are adding all the expenses. Finally, you will deduct all the expenses from total income. Yes? So no need of getting confused here in any manner. So let us go back to illustration 9, the question. Yes, we have obtained COGS. We have also obtained operating expenses that we are supposed to deduct. Next is to deduct financial expenses. So from this question, financial expense is only one. It is interest paid, which is 15,000. So let us write it down. Yes, you can see. Financial expense, interest 15,000. Lastly, other expenses. Other expenses lost due to accident. Yes? In illustration 9, nothing else remains to be recorded. Everything is recorded except for income tax rate 30%. That will be utilized ahead. From this question, we are obtaining net profit ratio as per the instructions given in illustration 10. And we have obtained all the figures with the help of this question. And we have presented it in the formula of net profit ratio. So obviously, the total expense is 6,25,000. This will be deducted from total income, which is 7,85,000. And obviously, the figure obtained is profit, but profit before tax, which is 1,60,000. Minus income tax. Income tax rate is given 30% in the question, illustration 9. 30% of 1,60,000 is 48,000. If you will calculate, 1,60,000 into 30 upon 100 gives you 48,000. Income tax is to be deducted from profit before tax to obtain profit after tax. So 1,60,000 minus 48,000 gives you 1,12,000, and finally, which is profit after tax, the one which is required for calculating net profit ratio. So finally, if you substitute these figures in the formula, net profit ratio equals to net profit after tax upon net sales into 100. Net profit after tax is clearly visible, 1,12,000. Net sales is here 7,70,000 into 100 gives you 14.55%. This is the answer for net profit ratio. Yes, so we are done with the illustration which is given related to net profit ratio. There is only one illustration related to this ratio. Yes, which is illustration 10 and the one that we have solved in today's lecture. A sum of similar kind is in exercise which is question 7 and which says, from the information of question 5 and 6 you are supposed to calculate net profit ratio. Yes, which you can do very well now after understanding the formula of net profit ratio properly and also the explanation of illustration 10. So you will be doing sum number 5 and 6 as a part of sum number 7. You'll obtain net profit ratio from sum number 5 and 6 from exercise. And that's all. We'll see you in the next lecture with new ratio. Till then, stay home, stay safe and study well.